This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, begin the show with two segments discussing the grain market. They start with talking about the wheat and corn market domestically and internationally. Continuing the show with their grain market conversation is Dan O'Brien and Guy Allen. They start with grain, sorghum, and soybeans, and then look into other macroeconomic topics. Ending the show is K-State meteorologist Chip Redmond as he explains how we have heated up and what his forecast is for the next week. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
As we're talking about the grain market today, looking internationally and domestically, however, starting off domestically, looking at the wheat market.
Yeah, of course, with harvest fast approaching in Kansas and having begun in southern parts of the U.S., we're wondering where prices will go in terms of the short run. So here this report lands, and really across the board, pretty mixed response. Wheat down about 3.5 cents on the July contract, not a lot of change. And corn for July up 1.5. Soybeans down about 8.25. So really not a lot of response really to anything there. When you look at wheat in particular, the USDA did come in and acknowledge the strong pace of U.S. exports that we've had of late, both overall for all U.S. wheat varieties and in particular also for hard red. But what the USDA did was to raise the projected export number for this 25-26 marketing year, which will begin on June the 1st. So we're in it now. Raise that projection by 25 million bushels to give us an ending stocks figure now 25 million bushels lower, down to 898 million, 45.3% stocks to use for the U.S. And we're still sitting on ample supplies of hard red winter wheat in Kansas. We have a stocks to use projection of just about, 62% stocks to use. So domestically for hard red winter wheat in the United States, for every 100 bushels that we're projected to use of wheat right now, we have ample supplies. Basically 62 that we're projecting will still be around at the end of this marketing year come May 31st, 2025. Guy, how does I guess I'd throw that over to you. What do you see happening in the wheat-wise in the world markets?
Well, in the big wide world out there, world production's pegged at 808 million metric tons. That's up 1% a year ago, and that would be a record wheat crop globally. And I think that's reflected in the carryover number you're looking here at ending stocks in the U.S. Just to run through some of the major wheat producers, starting off with India. India is kind of an interesting situation. They're projecting to have a record wheat crop in India of 117 million metric tons. That's up 1% from a year ago. And in conjunction to that, a commodity that competes with wheat, particularly in South Asia, is they're looking at a near record rice production, second highest on record at 150 million metric tons. So India can either be an exporter or an importer. At the moment, they've got sufficient supplies. They're building stocks. Don't necessarily think they're going to be a big exporter at this point in time, but they definitely won't be sitting in that import situation. Another situation, China, another big wheat producer over there. Imports are pegged at 6 million metric tons with an estimated crop of 142 million compared to 140 last year. Now, I just got back from China. Some of the discussion over there, and you're seeing it in the trade, is with some dry weather, that crop could be down 5 to 10 million metric tons, and that would lend itself to be maybe a little more optimistic on the imports, but we'll sort of see.
And if I can add in on China, 2 years ago, stocks used at 87%, 84.5%. The last marketing year now projected to be 82.5%. But what you're saying, if usage is unchanged, the crop drops off, that could drop below 80% to 70, and that would catch the world's attention, I would think.
Yeah. Look, with those big ending stock numbers, I don't know if they'd have to reach as far as the U.S., but at least it's potentially a bit more business there in China. So we'll see. Just looking at those major exporters, looking at Russia, a lot of these numbers were unchanged, but Russia's up 3% from last year at 83 million metric tons. Export projected at 45, up 1.5 million. Ukraine production at 23 million metric tons, down 2%. Exports at 23.4. You put those two together, exports are expected to decline by 2 million metric tons, down 3%. EU production just slightly higher, 136.5 million metric tons versus 122 last year. Exports pegged at 34.5, just up 500,000 metric tons. Our neighbors to the north up in Canada, production at 36 million metric tons, up slightly from last year of 35. And our friends down under on Australia at 31 compared to 34. Some dry weather in the southeast has knocked that crop back a bit, although they have had some recent range. And Argentina's up at 20 million metric tons compared to 18.5 last year. So we look at ending stocks for the major exporters. This year we're looking at 10.6, just down slightly from last year at 11.2% stocks to use, and then 23-24 at 11.6. So we are tightening stocks up a bit for the major exporters, but I'd say they're not critical at all.
What are we seeing then for the corn market?
Really, the story in the corn market it continues to be, for the most part, what lies out ahead of us. We've got all the production uncertainty that we'll have to deal with in July and August. USDA kept steady state in terms of their projected yield, 181 bushels an acre. There will be a potentially important report at the end of this month, the USDA acreage report, that could come in and impact the supply-demand balance sheet. And again, with the way the USDA handles their yield numbers, they'll probably take 181 bushels an acre, and they'll take whatever that acreage report tells them, higher or lower than current projections, and go with that. One thing that did happen is that the strong pace of exports that you and I have been talking about, Shelby, for the last several weeks really showed up in the old crop supply-demand balance sheet for the market year that'll end August 31st. The USDA raised that projection by 50 million bushels up to 2.65 billion. Of course, they took that 50 million then off ending stocks. So now for this old crop marketing year, we're down to projected ending stocks of 1.365. And when we've been down at 1.365 billion bushels of stocks before, those were some pretty high price years. But that was last year. So now here we got down to that at the end of the old crop year. We're projecting for the new crop year, taking that 50 million and just cycling it through 1.75 billion bushels carry out, and that's down from 1.8. So, Guy, it's kind of a conundrum to me. And when I look at the corn supply demand balance sheet, we're at 1.75 billion, and we're not seeing the market respond in a high way. Ending stocks to use domestically still at 1.3% stocks to use. Old crop down to 8.9. But these ending stocks numbers aren't that far away from where any weather risk that could come in and affect the U.S. crop in the coming months wouldn't bring up a sizable response. So that kind of sets the stage then for what you see internationally, Guy.
Yeah, no, I think you're exactly right. Corn, and for some time I've been a bit optimistic that corn would be the leader in any particular rally here, given its tightness both in the U.S. and internationally. Just to look at the whole coarse grains complex for the moment, internationally, ending stocks for total coarse grains projected to be down 3 million metric tons to 302 million. That's 11 million metric tons declined from last year or from this current marketing year.
And 2 years ago, it was at 347 million. So we're not just dancing around with lots and lots of coarse grains around the world.
That's right. And then looking at corn more specifically, ending stocks at 690 million metric tons. That's a 10 million metric ton decline from the prior year. So it's we are tightening corn up. It's not a record crop, but it's a near record crop, and we're seeing just good demand from the livestock sector, particularly in that, which has been a quite good residual strength there. Looking at global trade and exports, they're pretty much unchanged. One thing I'd comment is that wheat feeding is projected to be about a million tons, just under a million tons higher at 152 million metric tons. China's estimate of wheat feeding at 33 million metric tons. So, look, we've got wheat prices down to where they're pricing itself aggressively into that feed ration on that. So that's why I don't see much downside to wheat, and any rally there's going to be led by corn.
And Guy, if I can add in internationally, what do you think of Mexico? Because when I look at what's happened the last 3 years, the stocks to use figures are tightening up. We were at 12.6% 2 marketing years ago, 11.83, and the one we're still in projected down to 11.53. And Mexico's a big player in terms of our shipments and closeness, and here in North America. Any thoughts on the Mexico trade?
Yeah, look, the Mexico trade, they'll come in as our number one buyer of corn this current marketing year and continue to see that. It's been dry down there, but also we're seeing good domestic demand there. Now, there's some political things that need to be addressed on this non-GMO issue. It hasn't gone away. So it's, we hope they just, it would be nice if Mexico was sort of a seamless market to the U.S., and there really isn't any reason that it shouldn't be. But we have some issues there on trade that we do need to work out. But it's good to see them there every day in spite of that. So I didn't run through the major exporter ending stocks numbers this year. It's down to 3.65% from last year at 4.7%. And year prior to that, 23-24 at 5.4. So that just shows you that tightness in those major exporters. And it wouldn't take much of an event, I think, to rally that corn market.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show and conversation on the grain market with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, as we continue talking about the grain market, moving on to grain sorghum, and what are we seeing domestically?
I think 2 things that I'm watching. The first would be what the acreage report will show us. We heard a lot of discussion across the state about acres going back and forth to whatever. And so I'd be really curious to see the trade-offs on non-irrigated in particular between corn and grain sorghum, and in particular out here in western Kansas. I would also say that the supply-demand balance sheet was virtually unchanged, but I guess buried within that balance sheet for old crop, we're projecting 100 million bushels of exports, and we'll be challenged to get to that. I wouldn't be surprised if we're more like 75 or 80, but we'll see what happens, particularly if China would re-enter in an aggressive way. But right now it's looking like we'll come short. But then next year, projecting 250 million bushels, tremendous return to healthy markets, and China had to be a big part of that. So right now, projecting into the future, that's what you got for grain sorghum. And if you want, I'll just go on into soybeans, Shelby, if you'd like.
Go for it.
So virtually no change either in the soybean supply-demand balance sheet. So what we'd said before about corn and grain sorghum holds for this too. Again, we'll be watching that acreage report at the end of June as a big issue, and whatever weather would bring us out into July and August domestically. Other than that, if there's any news happening in soybeans, it's all in the international market, Guy.
Well, not much news there either, Dan. USDA increased expectations of ending stocks for next marketing year, 25-26, by 1 million tons to 125 million tons above, and that's just above last year. No change in soybean trade estimates for this current marketing year, steady at 181 million metric tons. We're sort of missing China there, but our beans are finding their way into other markets, and they're a bit more optimistic than I think a lot of people had thought. China's imports, they left unchanged at 108 million metric tons. Crush was dropped 1 million metric tons to 103. But next marketing year, they're expected to be at 112. Now, just a comment there sort of on the China situation. They have been building domestic inventory and stocks with Sino grain purchases. And that's that difference between imports of 108 versus crush of 103. So they are building some inventory. Now, China's not counted. When you look at major exporters, that inventory, growth in inventory is not counted. But looking at major exporters ending stocks to use, current marketing year, 25%, which is quite loose and comfortable. It is expected to tighten up a little bit to about 24.9 next year. Look, both of those are quite comfortable numbers. So, look, I don't see any joy in that whole oilseed complex, to be honest.
While we're on, Guy, with you, always wanting to talk about some macroeconomic things that are happening, and beginning with, what are we seeing for currency?
Well, currency's made some big moves here in the last week. We've dropped down to just below $97 on the U.S. index. That's given some strength to some of our customers' currencies. Should be supportive of commodities, and we've seen a bit of that support coming in. So, that move, that's the lowest level we've seen since March of 2022. So that's a good sign if you're long commodities. And also, I'd say if you're an importing country, I think that's reflective of expectation the Fed could lower interest rates, as well as maybe some poor economic news out there. Again, that would support lowering of interest rates. So let's move to the ocean freight situation. It's quite different than the currency situation. We've seen a bit of strength there in that market.
And if ocean currencies are strengthening, that either would show we've got shipments happening now in the world economy, some underlying strength, or the anticipation that it's going to come on with this tariff issue unwinding. Am I thinking correctly?
What's been driving the ocean freight? It's up at 1738. That's the highest levels we've seen since last October, November. And we're seeing more purchases of coal and iron ore is what's been driving that. And that's sort of an indication, I think, that maybe China's economy is recovering a bit. It's just really hard to tell what the situation is over there. I was just over there a week ago, and the economy, you just don't see the people out in the economic activity, but you just, without any data coming out, it's just, even if you question the data, it's just hard to tell. I think the other optimistic thing in that, I think, is the announcement that at least we've got the terms of agreement in place. Just waiting for Trump and Xi to sign off on that. I'm not as optimistic as some people. There's still a few, I think, showstopper points in there on access to technology and some other things. But at least they seem to be making progress after they came away from London last week. And I think that's reflected in both the currency and particularly in the ocean freight on that.
Guy, you mentioned that you're just recently in China, and what was kind of the attitude you were feeling over there?
Well, I was over there with USEC, the soybean guys, doing a risk management merchandising sort of workshop. So I got an opportunity to talk to a number of traders. And look, traders, no matter where you're at, I think they're all a bit frustrated on just the uncertainty of things, particularly on the tariff rates. The tariff rates, though, I'd say is those can be managed. It's not an execution issue. It's just, well, what's the price? How's that impact the price and the trade flows? And then, who's responsible for paying that's pretty cut and dry. The bigger issue with more uncertainty is this U.S. Trade Representative Action 301 effort where they want to tax Chinese-made or owned vessels. And that application, they've sort of worked through it. Their initial resolution that sort of exempts dry bulk shipments, which is most of your grains below 80,000 metric tons, it was a good move, but there's still a lot there that needs to be sorted out, and that's more uncertain. That one would be a lot harder for the trade to manage, and it would have a significant impact on your lower valued commodities, your dry bulk like corn, beans, wheat, coal, iron ore, as compared to what's coming on a container ship on a high dollar value commodity. And that's the one I think that the trade and the industry itself is probably struggling with a bit more of a concern.
There's a difference in what's stated as the agreed upon tariffs that the U.S. would charge Chinese products versus Chinese products, but at least the explanation I've heard is that China also has, along with tariff rates, they have a lot of non-tariff barriers. Phytosanitary, what qualifies to come in, and all sorts of things. So the tariffs are only part of the story as the U.S. and China wrangle with one another in terms of making sure that each country has access to the other's goods.
Yeah, no, that's right. And I think the good thing is, look, at least they're talking, moving in the right direction. So that's, as we've seen a shift in the market optimism on that. And I think that's reflected particularly in the ocean freight.
Are there other issues or concerns that you guys are currently keeping an eye on when it comes to the grain market?
Well, the weather right now, weather front and center for us. There's some uncertainty, at least in my view, of what the final size of the second corn crop will be in Brazil. There's some weather issues that go up and down with regard to the crops coming out of Argentina. The ongoing conflicts in the Black Sea region are a conundrum to me. And Guy, I'll make a statement. You could respond to it. I think the world had been through that time when, we ran prices way up because of Ukraine-Russia conflict, and now after that time frame, and they saw how the UN, other countries got involved. I think they're just trusting that even though that there's a conflict, that we'll move heaven and earth to make sure grain still comes out of that region of the world.
Just on that, it's a lot of the trade, particularly in export and the cash markets, is very much nearby. There's not a lot of forward structure in that. What's sort of compounding that's the tariff issue and the 301 action issue. Nobody wants to put out a forward strip of prices, bid or offer, just because of the uncertainty there. We're sort of seeing that to some extent in our domestic markets. When you look at Chicago, corn's the difference between July, September, old crop, new crop is about a 12-cent inverse. So in an inverted market, all that trade, it basically happens nearby. And I don't think we're going to see a repeat of last year's situation where growers carried a lot of grain over unnecessarily, because that's a pretty healthy penalty. Even when you're looking at soybeans, that inverse has come in a bit. Today we closed at about a it's still about a 24 cent inverse between July and September. Again, that's a big incentive. Make sure all your old crop stocks are cleared up, and anything that comes off early, maybe capture a bit of that premium. But it makes all that trade activity happen in the nearby, where wheat's quite different from that, being in a big carry.
You look at the volume on yesterday's trade on Thursday, and the volume and open interest, 517,000 contracts in the Dece contract versus the July contract, 456. Then the volume was like 160,000 contracts traded yesterday on the I think it's at the 22nd. It's the 20th, I believe it's right. But then the actual trading volume for December was half of that, 78. So people have their positions in the Dece contract for protection, but most of the trading still happening up front in July, September.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we end our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, did we see precipitation last weekend?
Yeah, last Friday and into the weekend, we had several rounds of showers and storms that developed in southwest Kansas and southern Kansas and Oklahoma and moved kind of north, fell apart, and then shifted east. And as a result, we saw pretty widespread precipitation across the southern border of Oklahoma. Some impressive rainfall totals. We had 2 to 3 inches of rain in portions of southwest Kansas, and that extended eastward kind of along that border again all the way to Missouri. And we did unfortunately have some severe weather with that. We had some upper-level support, some stronger winds, and some colder air aloft that allowed for some large hail reports. Had hail as large as 3 inches in southwest Kansas. And then we also saw a couple of hail reports 2-inch plus in southeast Kansas over the weekend. And, it's June. When we get precipitation, we're typically going to have either wind or hail along with it. And the good news is we didn't have any significant tornadoes or anything like that. You look back at this week is the anniversary for a couple of pretty high-impact tornado events in Kansas, like Udall and the Manhattan tornado and a Chapman tornado. And so we could still have severe weather this time of year, but thankfully we just got mostly precipitation out of this most recent event.
As we continue to look at this past week, we saw quite a bit of a temperature change.
Yep, we've had a pattern change as we saw the severe weather overall downtrend, we're having high pressure building to our south and west. And what that's doing is developing a pretty substantial area of heat. And that expanded northward across the northern Rockies earlier this week. It's since receded, and then it's looking to build north and eastward now over the course of the next week. And that's bringing us that heat that we've really been remiss. We needed growing degree units. We needed warmer temperatures. We even had temperatures as cool as the mid-40s this week. It actually broke a few overnight low records. But thankfully, those cooler temperatures are on the way out. We've got more sunshine and heat that's going to fill the forecast. Temperatures are going to be near 90 degrees almost every day going through the next 7 days, and potentially going to be even warmer as that high pressure builds and expands further into next weekend, potentially next week.
As we look at that temperature and precipitation, did we see any drought monitor changes?
So the precipitation this week was really beneficial for the drought monitor. We saw the removal of D0 across a wide area of southwest Kansas. So it basically took the state from nearly 60% of the state in D0 or worse drought down to 40%, a 20% change in 1 week. That's impressive. But unfortunately, when we look at areas of north central along the Nebraska border and pretty much north of I-70, they were the losers in this situation. They've gone now over a week or two without letting rains, and they're developing big deficits, average anywhere from 3/4 of an inch to an inch in that region. And we're building big deficits that are, as a result, leading to drought expansion in that area. And the soils are rapidly drying out. The wheat's turning really quickly with this new heat that we're seeing and with the breezy conditions. And so, unfortunately, while drought improvement happened in the south, we're starting to see that transition, that shift northward a little bit into north central Kansas of drought expansion.
What are we seeing for our forecast?
Looking forward, again, that heat's probably going to be the main story. There's going to be chances of showers and storms around. We're going to have several waves of thunderstorms that'll develop along the front range and try to move eastward. I think that'll happen Friday, Saturday, and Sunday. And I think they'll pretty much fall apart by the time they get to Kansas. There might be a couple isolated areas that see some wetting rains, but overall, pretty much everyone stays dry. A little bit better chance with a stronger wave in that system, maybe Monday and Tuesday, but then that high pressure builds in, and it looks like drier conditions are going to dominate our forecast as we get towards the end of June. Climatologically, we favor it. We just need to keep timely moisture, and a lot of the crops, I think, by that point are going to start to be very thirsty, and that means high stress and, unfortunately, could result in some impact to agriculture.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.